Hi everyone, welcome to Value. So today we're going to talk about Buffett getting back into tech. So probably not the most innovative tech that we know, but HP is still quite a relevant company in terms of a company that produces a decent quality product at a really, really good price point. And that's the one thing that I think keeps a lot of customers coming back. And it's kind of caught Buffett's attention, and he's kind of brought a $4.2 billion stake in HP. That's basically 11.4% stake, which for Buffett, if he goes over 10% stake in a company, it means he loves it. He loves this company to bits, because the minute he starts buying anything over 10%, he knows that he has to start reporting to certain rules, and he doesn't like that. He finds it annoying. So the minute he buys over 10%, it's a clear sign that he doesn't care about averaging down, because he thinks it's a really, really good price, and he really loves the stock. So basically, it's a clear translation that HP is basically a stock that Buffett loves quite a lot. Though, and also in that sense as well, he probably has to be buying that much to kind of have it make a difference, because buying anything less, in a sense, is kind of so tiny for Berkshire Hathaway's portfolio, which is the company Buffett runs and owns part of, majority, that basically, if he doesn't buy that much, it's not going to move the needle. And that's also one point as well. He could just be buying a lot just to make it worth it. Though in most cases, from what I've seen, is he usually buys over 10% when he loves it. So as we put it here, Buffett has brought 121 million shares of HP in a new filing on Wednesday evening. That investment was valued at $4.2 billion, which gives Berkshire Hathaway 11.4% in HP. So if we look at the stock, closing price yesterday was $34.91. But obviously, it's not going to be the opening price when it opens today, because everyone has found out Buffett has brought a big share of HP, and basically everyone wants a piece as well, because all of a sudden everyone's like, if Buffett wants it, we want it too, because he's just so good at what he does that why wouldn't we trust him? So currently the valuation is $36.7 billion. And basically, it's meaningless without the financials. So we're going to dive into the financials and go, why does Buffett like this stock? Well, firstly, their first quarter was amazing. They did 99 cents per share when they expected 92 to 98 cents per share. So all of a sudden, hey, they're outperforming themselves. They're outperforming what analysts expect as well. And everyone's really happy. Shareholders are happy, analysts are happy, the company's happy, and it kind of attracts new shareholders like Buffett. And in first quarter, non-GAAP diluted earnings per share was $1.10, and that was above their forecast of 99 cents to $1.05, which is overall really, really good. When a company outperforms their own expectations, it means, they're doing really well. Though they could set really conservative kind of guidance as well. But in most cases, they generally try to be quite realistic. And when they do outperform, it is usually quite good. So for first quarter revenues was $17 billion. That was up 8.8% on the prior year. So this company is not only outperforming, it's growing at a fairly decent rate. 8.8 isn't kind of hyper growth, growth that we know as amazing. But it's pretty good for a company that's kind of making some really, really good cash flow. So their first quarter net operating cash was $1.7 billion, and their free cash flow was $1.4 billion. So basically, they're making all this money, and they can just spend it how they like, basically. So first quarter, they returned $1.8 billion to shareholders in the form of share repurchases and dividends. So Buffett loves companies that basically produce a lot of cash flow, pay it back in dividends or share repurchases, and that's for him the best way to return it back. And basically, if we look at the valuation at $36 billion, them returning 1.8 billion is basically them returning close to 5% in value back to the shareholders, which for Buffett is amazing, right? Especially when you're looking at that operating activities generated 1.7 billion and their free cash flow was 1.4 billion for the first quarter. So you do the numbers and all of a sudden, yeah, like Buffett really found himself a good gem of a company that is producing amazing cash flow, probably not growing too much in that sense, and like 8.8 still okay, but it's all about value investing. It's about buying a company that has a low valuation, who is paying out significant amounts of cash, and basically Buffett has found a really, really good cash cow in HP. So basically, yeah, I think so far so good, right? We can look at this, take it back probably over 10 years ago. HP used to, on the peak in 2011, they did $127 billion in revenue. And then basically in 2014, it fell off a cliff and it went to 56 billion in revenue. So all of a sudden, the prior year in 2013, they were doing 112 billion, and then all of a sudden it just dropped off a cliff and went to 56 billion. So all of a sudden, HP was becoming, less relevant, and their revenues were slowly decreasing to 48 billion in 2016, though they kind of picked himself up and said, what are you good at? Continue to do that really well and just focus on that. And it turns out it's kind of working out that, hey, they don't have to be the most innovative company. They just have to have a lot of repeat customers. And that usually comes in the form of, hey, most customers actually just want tech at a really, really good price point, and that just works. So when it comes to printers, that's kind of what you're looking for. When it comes to computers, that's also what you're looking for. Most people aren't there for the highest specs, because the highest specs generally is the most expensive, and most customers don't really care about that entirely. They just want a really good working product at a decent amount of specs, but at also a really, really decent price. And HP is doing that in a lot of cases, because I find myself buying HP products time and again. So yeah, I think what they're doing is working, and it's showing in last year. Last year they did 63 billion, and which was above what they did in 2020 at 56 billion. And this year in the first quarter they're up 8.8% on their revenues. So it's likely they're going to outperform their last year's result of 63 billion, and probably do something that's close to 70 billion. So kind of like Buffett has actually done his homework and he's found a really, really good company. And I think now people might start realizing that, hey, this is a really, really good cash cow. That, hey, it's not substantial returns, but it's really, really good cash flow. This is literally a cash cow in the form of, it generates a lot of cash. It's paying it out to shareholders. And basically that's it. You're not going to get too much in the form of like share price growth entirely, but you're going to get a really good form of cash flow. It's better than putting it in the bank. So I think it's basically a Buffett type company that is undervalued, producing a lot of cash and giving it back to shareholders. Let me know what your thoughts are. Did Buffett make a good choice? Do you think HP is a good quality company? Like and subscribe if you appreciate the effort. Until then, good luck investing, everyone.